Alrighty, guys, buckle up because earnings season is not done yet. We have 5 companies, 5 stocks to cover in this video, all of which obviously are reporting earnings this week. We have to go over what to expect, EPS, revenue-wise. We'll break down the charts, what I'm looking to do with these stocks, and in general, guys, I want to go over where my head's at in this market, what I'm looking to do, what I'm buying, right? So let's dive into it. Hit the like button, make sure to subscribe, of course. Take a sip of your coffee, join the Patreon if you want to keep up with what I'm doing in my portfolio, be a part of the Discord, plus more. All of that's linked down below, also pinned in the comments, or go to stassurfest.com/Patreon. And now let's get into it. So we obviously are coming into this week after seeing a bit of a drawdown in the overall market, where we can see SPY sold off all week, right? QQQ did the same thing. We all know that. Lower lows, lower highs all throughout the week. And we actually ended off the day, Friday that is, ended off the week with a nice rally. QQQ rallied from 598 to about 610, about a 2% pop there. Same with SPY, maybe not a 2% pop for SPY, but it still went up a good chunk, 661 up to about 671, 1.5% into close, and that's on speculation that the government is about to reopen sooner rather than later, right? Which I've been a proponent of that. I think once the government opens back up, we get this rate cut as well. This additional rate cut potentially in December. I feel like we're going to see a big pop, and the market is already starting to potentially front run this move. And I think overall, man, tomorrow is going to look pretty good. The overall market, I think we're going to have a green day tomorrow, guys. But I could be wrong. I could be wrong on that. And a couple indicators are obviously the way that we closed on Friday. And ultimately, the crypto market is up pretty nicely right now. That's usually an indicator that, over the weekend we might be going into a green day on Monday for the stock market. But it's not guaranteed. But it's something that I'm paying attention to, right? The fact that, again, crypto's up this weekend. We saw a big run into close on Friday, and the government could potentially be opening up very soon here. All of these things, show that potentially we start off the week green tomorrow. We'll see, guys. What do you think? Let me know in the comments. But in the grand scheme of things, man, we're still in an uptrend. SPY looks great on the 4-hour chart. Same with QQQ. We're obviously holding an uptrend. So yeah, this just honestly looks like a healthy pullback that is starting to get bought up. So let me know your thoughts in the comments about that, guys. And now let's just dive into these stocks. Number one, we have Rigetti, ticker RGTI, Rigetti Computing, right? Which this stock, holy freaking moly, guys, has been going nuts. I mean, this was at $6 back in April, right? We pretty much 10x'd to $60 a share. Now we're drawing down. We've seen a big drawdown over the last month to about $34, so we're down 40% from these highs. Heading into the earnings tomorrow, Tuesday, it looks like here, the 11th. On 11/11 in the morning, on Tuesday morning, we're getting Rigetti's numbers. And yeah, we're heading into these earnings beaten up, again, down 40%. We have a death cross. We're under the moving averages on the 4-hour chart. And it looks like here we have a head and shoulders that kind of played out. So at this point, we're very beaten up. Actually, it's a nice setup for earnings, especially if earnings come in pretty strong, right? So let me see these numbers here, guys. I have them at, let's see, EPS, the estimate, let me pull these up to double check. The estimate for EPS is -4 cents, so they're going to lose 4 cents versus the loss of 9 cents from last year. You guys see that, or you can't see it, but I can see it. I'm telling it to you, right? I'm saying, reading these numbers off. And for revenue, let me pull this up. $2.17 million dollars with an M, yes, million, versus $2.38 million from last year. So revenue is actually going to be declining 9% year over year for Rigetti, and the market cap is $11 billion. So, I mean, yeah, it's a little, if you thought a Palantir's price to sales was crazy, look at Rigetti, guys. $11 billion market cap, all while doing $2 million of revenue on the quarter. So that's nuts, right? We're not going to really debate whether or not it's overvalued price to sales wise. It definitely is, but that's not what investors are paying attention to, obviously, with this one, right? They're looking at the future, the growth, blah, 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 what the next 5-10 years hold, and that's what really is pushing the stock. But yeah, I mean, it's had to come to, Jesus moment, if you will. It's had a come to truth moment in the last couple of weeks, and it's down 40%. Let's see if this earnings report is enough to bring it back up, because at the end of the day, again, we have a Head and Shoulders that played out. We're kind of free falling, but we are also right above the previous resistance from the end of September. We're holding that as support right now at about $34, $35, $30 to $35, that window. So let's see if that acts as support, guys. Rigetti. Number 2, we have CoreWeave. Let's pull this up. CoreWeave is ticker CRWV. Let's pull this up here, which CoreWeave, guys, the last couple of months has not been doing well. I mean, it had a huge run out of the lows from April. You can see it hit $33 in April, went all the way to $190. I mean, this thing had a ridiculous run, 400%, and now it's kind of just been down and out since, slowly declining, giving back some gains. Now we're at 105, so we're down 45% from the recent high. So CoreWeave is, I believe, on Monday. Yeah, they're tomorrow after the bell. So CoreWeave, they're expecting EPS. They're going to lose 51 cents, right, on revenue of $1.28 billion, right? So CoreWeave, I mean, they're going to be losing money, but they're top line's, respectable. 1.28 billion, a lot more than obviously Rigetti, different companies, but $1.28 billion, EPS, they're going to lose 51 cents. And look at the chart. Obviously, CoreWeave just IPO'd recently. It's up big time from the IPO price, although, it's down from the highs. It's still up a lot, so I'm eyeing it up. I'm not necessarily going to buy the stock per se, but I'm looking at it for earnings this week. We can see we're still in this little downtrending channel. You guys see it. So if they disappoint by any means, expect this to maybe continue to fall down here, fall through down to, let's say, $80-$90 a share. Totally possible on these charts. So Oklo, another one that's just ridiculous. OKLO. This one has no revenues. They're expected to lose 12 cents EPS versus the loss of 8 cents from last year. And the stock is up, holy moly, around 600% right now from where it was back in April. So we went from 17 to about 115. That's close to 600%. And when we got to 193, which I wish I bought the puts. I was talking to you guys in real time at that time. I was like, I'm so close to buying puts. This is getting nuts. That's what I was saying a couple weeks ago. I never ended up buying the puts. I kind of wish I did, but I didn't. So at that point, though, we were up 1,000%, man. Think about that. 1,000% for a company that is pre-revenue, right? They're losing money, obviously, and it just doesn't make sense to me. Trust me, I like investing in growth companies where there's high risk, high reward, but buying an Oklo, which is up hundreds of percent pre-revenue, they're losing money when it's up this much in a theme and a narrative where I think overall the run could be getting exhausted here. It's a little risky for me buying an Oklo right now, but I'm not going to bet against it considering, look, I mean, I'm not blind. You know what I mean, guys? I see what's going on. This stock it's in a theme that clearly is still hot, although I think it's going to run out soon here. But this could easily run up massively after earnings. I'm not naive to that fact. I've seen it happen before, and we've seen a huge drawdown already. It's down 40%, so shorting it here doesn't make sense. Be careful, but I'd be tempted to if it pops big time after earnings again. Then maybe we can get a short entry point here. So what do you guys think about that? And by the way, hit the like button. Make sure to subscribe. If you haven't done so already, hit that follow button. I appreciate you all for tuning in as always. And check out the Patreon if you're interested in seeing how I build my portfolio. I post all my real-time moves on Patreon, right? And there's a Discord. You get my charts and ideas throughout the week. You get more one-on-one access with me, guys, if you're interested. That's linked down below. Also pinned in the comments, or go to stassurfest.com/Patreon. Make sure you guys join that. So Circle Internet Group is number 4 here. CRCL is the ticker, which we were looking at the breakout, the bullish divergence that I was seeing that was forming a couple weeks ago. It actually didn't end up playing out, with the benefit of hindsight now, and we're actually down even more from where we were a couple weeks ago. So Circle tried breaking out through the mid-hundreds. Now, as of Friday, we got down to $100, $104 a share. So we're holding on $100 by a thread now on CRCL. And it's actually down a good chunk from where it peaked after the IPO. It got to $300 a share. Now we're at $100 a share. So honestly, man, if this, not that I'm just going to go all in on it, but if this pulls back down, let's say to that $75, $100 a share range, maybe after earnings, I might consider buying a little Circle Internet Group, guys. Maybe we'll do a deeper dive on Patreon, or I'll do a deeper dive here on YouTube, actually. We'll see. But I think there's something here. If we come down a bit more, we'll see. Circle, their EPS estimate is 17 cents, and their revenue estimate is around $700 million. Not bad, but I want to see the chart really confirm a rebound, honestly, before getting into it. But then again, we'll see. If it slips down to 75, I might buy some without seeing the rebound on the chart. But that could get dangerous. We'll see. But yeah, that Circle Internet Group, they're coming up this week on the 12th. So that's what? Wednesday morning. Get ready for them. And last but not least, guys, we have Disney, ticker DIS, which I used to own this stock years ago, and I finally just threw the towel in. I forget if I barely made money. I forget if I made money on it. I'm pretty sure I made a little money. But then again, when you consider, when you consider what's the term, opportunity cost, when you consider inflation, I probably didn't make much money on the stock. But yeah, it's one of those that is just, honestly, I mean, it's not the best stock. I don't know how to put it. It's just not the best stock. It's at the same price it was at a decade ago, and that's part of the frustration I had with Disney when I owned the stock. It's like, are they ever going to turn things around? They tried turning things around, right? They are slowly turning things around, but the stock just doesn't want to follow. So it's one of those stocks that I'm never going to buy it again for the most part. It's one of those companies that it's great. It's a great experience. Like when you're at Disney, I actually like going to Disney once in a while with the family. It's fun, but it's like, I'm not buying the stock, right? It's this. I've talked about this before, right? When you're investing in stocks, when you're first starting out, you're like, oh, let me just buy stocks that I like or companies that I enjoy, Let's say if you just start out, you buy Disney, you buy, Crocs because you like the Crocs, right? You buy Apple because you like iPhones. That's a great way to get your foot in the door with investing. Yeah, I mean, it's better to do that than not invest at all. But then you realize, wait a second, it's like, oh, Disney, yeah, I like Disney. I like the movies, but that doesn't necessarily mean it's a great stock, And I guess I kind of fell into that with Disney when I first started investing. We're talking a while ago now, guys, close to a decade. That's when I started buying, oh, I'm going to buy stocks that I like the product, or I like the theme park, right? It doesn't necessarily work like that. And Disney is just not the best investment. It's just not. That doesn't mean over the next 10 years it can't be a great investment. It might go up a lot. Who knows? But I'm staying away from it. I'm not the biggest fan, right? I'd much rather buy a growth tech stock, or a solid value dividend play than a Disney. I'd rather just spend 5K and go to Disney than buy their stock, easily. 100%. Either way, well, it's probably more than 5K nowadays, man. You're going to need like 10 grand to bring a couple people to Disney, stay there, and do it right. Whatever. EPS estimate is $1.02 versus $1.14 from last year. So, their EPS is shrinking, right? Revenue, look, $22.78 billion is the estimate versus $22.57 billion from last year. It's up not even 1%. And when you're accounting for inflation, it's not growing, guys. So Disney, yeah, not a fan of it at all. If this stock somehow got to like $50 a share, all right, maybe I'll consider it as a deep value play. But here over 100, when it was at $100 a decade ago, I'm good. I'm good on it. No, thank you. But yeah, Disney, we're watching it for this week, guys. All these stocks, and we could go on and on. There's a lot more stocks that I'm watching, not just these five. But that's it for the video. Let me know your thoughts in the comments. Hit the like button, subscribe, join the Patreon if you guys want to keep up with what I'm doing in my portfolio. Again, that's linked down below, pinned in the comments as well. And with that being said, cheers. I'll see you all in the next video.